What is going on, everybody? And in this video, we're providing you a state of the market and stock picks for March 24th, 2023. So if that sounds like something you're interested in, consider subscribing, as we do provide daily and weekly updates to get you prepared for the day and the week ahead in this glorious market. Now, very interesting day on deck. Post Powell, post monetary policy. And you've had Yellen pretty much take the spotlight all day as she is trying to reassure that your banks are safe. But the honest truth is they don't have enough money to cover all banks. This is something I've been trying to emphasize, but it's funny because you have some news that does come out, and the market is seeing it as quantitative easing, which in a fact it is, and in a matter of fact it is, in the fact that more money is coming out to help these banks, but the problem is, again, it's not actually helping, right? We found out that First Republic, had $30 billion. Again, still not enough. Credit Suisse is having tons of issues. There was actually found out today that there were some sanctions placed on the U.S. as well, Russian sanctions from Credit Suisse and the USB are among the banks facing the U.S.-Russia sanctions probe. So that came out after hours. And then during the day, come to find out, essentially the Fed this new tool that they have, the bank term fund loans, were raised to 53.7 billion, 11.9 billion a week ago. So they're continuing to pump money over and over into these banks in hopes to save them. My thing is I think even with the massive amount of pumping, you're still going to get failures. And I think, again, you're going to lead to deflation. I think this money is just going to essentially it's going to be gone from the system, essentially, right? It'll be eliminated from the system if these banks fail, right? And so, because the amount of debt and being underwater. So I think this is all planned in a sense that it will essentially work itself out. And I think what is expected, if we can get a fraction of these 185 banks that are way underwater, if we can get a fraction of to buckle, even with putting tons of money in, which would cause even more cause less circulation of money, and understand that in doing so, that this could lead to big deflation and could get us to the point where actually we start cutting rates. Things get worse by the day, by the hour even, and then you still have Yellen coming on every other day saying that things are okay. And then the market is pumping because they're seeing that this quantitative easing from the banks is happening, and then you go from there. And that's kind of where we're sitting at. We wait till something next breaks. We have the 25-point basis move. Again, we've got more news coming into Friday. I would not be surprised. We started selling off heavy today, but as you can see, we've wicked back and forth. We had a really sharp pump, and then we wicked all the way back down, and then I kind of just break even a day. Again, coming into another weekend, what bank is going to be into this weekend? I can guarantee there will be another bank this weekend that essentially the Fed is going to have to bail out. If it's not multiple banks, it's something you have to keep in mind. What if it starts becoming multiple banks as opposed to just one? And you can't continue to fuel 50 billion here, 30 billion there. It's just not going to happen, right? There's just not enough money in the system to be able to support all those banks. And that's why Yellen keeps reiterating that it's not going to happen, that Powell just can't go out there and say that all depositors are essentially protected, because that's not true. But being said, I mean, a lot of depositors are, considering that the FDIC is supposed to cover up to 25 or 250,000, and that's a big thing in debate this morning, that maybe FDIC needs to cover more. And if you have over $250,000, should not just be in a bank, right? It should be spread out between multiple banks, maybe even a lot of federal market accounts, right? And know that you get better protection there than you would in a bank. Why would you just keep that amount of money in a bank But again, not financial advice. So you look at your money market accounts and see what happens. But so with that being said, again, we wait and see. I mean, the volatility, the fact that the index is moving the way it is absurd. There is way too much volatility in the index in itself. You're getting these huge fluctuations between tech and the banks. The banks just selling off, but tech is holding, so it whipsaws as soon as the banks jump back up. And so you can get burnt really easy in this market with these massive whipsaws and not really understanding what's going on. Again, you're getting false hope, which is something they have to do to try to preserve panic. But at the same token, it works against you because then the market itself will continue to play this until, something I've talked about when reality meets these expectations of utopia and destroys them, then that's when it sets in, and that's when action is actually taken. So we'll see what happens from here. Again, I'm expecting a lot more. I expect things to get a lot worse going into tomorrow and going into the weekend. I think it's going to be another long weekend. We're still not out of March yet. We got one more week. This is why it's March Madness. So we're going to see how we finish up the week. How we finish up next week is going to be important. Again, once things start to buckle, we have to understand we're coming back in earnings, and normally you have the earnings rally, but which could be happening and might be why we were kind of being held up. But the bank earnings are kind of at this point, I'm kind of really grimacing right now because of the fact that bank earnings might be really nasty. So we will see. We will take it day by day and see what goes from there. But again, not too much news, and I've been making these videos pretty long, so I don't want to make this one too long. But again, the struggle is real. You can see that on the index. Again, the index shouldn't be wicking like this. Is absolutely absurd. Shot straight up today, then got news about banks, right? The banks are looking bad. And then that was the first thing to start selling. Then Yellen was talking, starts selling more about the backing of the banks, and not all banks are going to essentially get bailed out. So it's not officially a bailout because not all banks are getting bailed out. At least if that's the story she's trying to stick to, she's still portraying that. So the dollar, like I said, with the quantitative easing and everything, yes, the dollar is going to lose strength, but we'll see, right? I think if you get a collapse of a bunch of banks, right, that's going to destroy the money supply, right? You're destroying money supply, so that might be that may be the reason why they're pumping so many billions back into it. Because if it's that bank fails, right, they only got so much as well, right? They can't dish out trillions of dollars to save all the banks. It's just not going to happen. And so, being said, you can wipe out some money supply. Some of these banks actually fail. The money that you put into it, you fail, and the money's gone. So it kind of destroys the money supply at that point, right? So, but with that being said, we'll see, right? A lot of these banks are really deep underwater, and so you really have to understand that they don't have nowhere near amount of assets. And this is what we've been talking about. They're making fun of crypto all this time when our banking system is the biggest thing that does that. So as far as the fractional reserve system, so we'll see here. But the dollar again, I continue to see how this plays. I'm not really going off the dollar anymore because of what's currently going on. I've stated that before. Not really concerned about where the dollar goes at this point. Bitcoin, again, still holding, not giving out quite yet. Interesting. This is something else that's interesting that's happened over the last 24 hours. Is it seems like SEC is essentially come out and start attacking different on-ramps to crypto as Kraken and Coinbase have essentially been essentially being probed, right, for what they're doing. And then you had Square get probed for some other interesting news that they're doing some illegal activity and whatever. And then they were essentially scaled down, right, and ultimately downgraded. And with that being said, that led to Square, or Block, I should say now, is filing a lawsuit against them for that. So again, it's it's quite coincidence that it all comes out at one time, and that they say they've had information for years. Now these attacks, they take a while before they start happening, right? If the SEC is going to go after somebody, they're going to build a very strong case or have a lot of ammunition to bring them down. So that's pretty much, I think, what's going on right now. It looks like they're potentially trying to close the on ramps and then potentially move into CBDCs, which are supposed to be taking place in July. They go active. Plus the debt ceiling. Debt ceiling was a big discussion today as well. So a lot of really, really big, impactful events going on today, or talks today about what could be happening in the near future. So that we get a lot of volatility with what's currently going on. And so Tesla, interesting spot. It's just kind of bouncing around, waiting for news. Again, we need bigger news. There's no reason to run right now, but there's also no reason to sell. We know things are bad, but things could potentially get worse. So people don't want to put risk on right now. Institutions want to wait and see what happens first before they start putting risk on. So Tesla's just kind of in a dead man zone. If you want it to go lower, it needs to break essentially the 184. You go higher, we need a break of the 200. Then you have a really hard ceiling roughly around the 215. So even if we do start going higher, it's going to be another hard ceiling there. Again, I see this thing even more coming down even more if and when there's another bank that starts failing, especially going into the weekend. So NVIDIA is still looking strong despite everything, but it's still at a really hard ceiling, roughly around the 275 mark. So really looking for that to break. It needs to hold roughly the 262. If it can break that, then you can put a huge gap down at 242. Like I've stated before, this thing has got some huge gaps to fill. Again, but it's really driven by ChatGPT, and understand that it could get a lot of. That's why it's got all this momentum. So it's really hard to kill this momentum because you keep getting good news about ChatGPT. So this thing keeps persisting and keeps pushing up. So looking for that again. If it does break the 258, then it can look for it to start coming down and start testing some of these big pushes that we've had to this point. So BA. Again, just kind of chopping around. I got some really bad news today, too. I think there was a bunch of security badges or something with BA that was going on. And yeah, apparently they've been on the site, I think, for over a year or something like that. And they had expired badges or something like that. Took them down initially, but after that, obviously it didn't matter too much. So they fought right back and kind of sitting right there. So again, if this starts to fail, again, this is like the banks, it holds a lot of weight. So if BA starts dropping, it's going to bring everything. It's going to pull way heavily on the index nonetheless. So, and then you have JPM, again, still just winding down. This thing's ready to drop at any moment. It's really the only bank that has a lot of meat on it still left. Again, I still think it's coming down to the 117. I think that's anytime soon. As you can see, it's flirting with the support here, roughly around the 125. If it breaks that, I think we can drop down and retest that. But then again, I think it starts getting feel. It might come even lower. You kind of got this gap area here in which you can fill. So you could probably get down to 110. Again, if we start getting real panic, this thing could even sell down even more. So watching the banks, Goldman Sachs already been wrecked. So watching for potential continuation of the banks. I wouldn't be surprised if some of these banks hold up because they've already sold off quite a bit. It's just JPM that's lagging behind. Bank of America still, even though it's not selling a ton, it's still selling quite a bit. So looks like we broke support there. If it can't hold above essentially the 28, this thing is definitely headed back down, potentially down to the 23 mark. So we'll see there. But that's pretty much all I got. I didn't want to make this video too long. Again, we are really waiting on the next news event. There's a lot of news right now, and that's what's driving the market and why the market is undecided, because it doesn't have a particular direction highlighted. So with that being said, if you've made it this far, go ahead and drop some comments. I want to know what your thoughts and ideas are, what you're looking at for tomorrow. Again, I go over a lot of the same stuff because I want to see uh, the general market is still pushed up too high from where it was after the last earnings run. It could just be a higher low, and maybe we go up from here. But there's still a lot of bad things that weigh heavily on the financial system. So it's hard to just jump back in without applying some sort of risk management, whether that's hedging or whether that's taking some of your position off, whatever the case is. But right now, it's just really not a risk-on environment. So we kind of get more clarification on what's going on. And again, I think we're going to get some really nasty earnings here for Q1, even worse than Q4. We're going to get some real exposure to the banks and see how bad they are. And then we see from there. So that being said, have a good one, and I'll see you in the next video.